backed by gold. In fact, ironically, the one thing that might come out of the whole crypto bubble is tokenized gold, right? Gold may be the only real winner, right? Rather than killing gold, blockchain may have just given it a new lease on life by making gold even more efficient than it's ever been as a medium of exchange, making it more liquid, making it more divisible, making it more portable, right? All the characteristics that people think Bitcoin has that are better than gold are worthless without the underlying value of gold.
In today's news recap, gold falls as dollar firms, traders await delayed U.S. jobs data. Gold prices dropped more than 1% on Thursday, pressured by a firm dollar and fading expectations of a Federal Reserve rate cut in December as investors waited for a delayed U.S. jobs report later in the day. Spot gold was down 0.6% at $4,055.20 per ounce. The dollar index firmed near a 2-week high, making gold more expensive for holders of other currencies. Dollar firmness is weighing on gold, but the price choppiness is typical for this time of year, where we have some good two-way trade with profit-taking and book-squaring meeting early investments ahead of the new year, said independent analyst Ross Norman. Minutes from the Fed's October meeting released on Wednesday showed it cut interest rates even as policymakers cautioned that doing so could risk entrenched inflation and a loss of public trust in the U.S. central bank. What do you think, you guys? Will the Fed make another massive policy mistake, or will they make the right decision for once? The Fed will still lack much of the data at its policy meeting on December 10th, as the next jobs report has been delayed until December 16th. Traders now see nearly a 34% chance for a rate cut next month, down from 49% on Wednesday, CME Group's FedWatch tool showed. Non-yielding gold tends to do well in a low interest rate environment and during times of economic uncertainty. UBS raised its 2026 mid-year gold target price by $300 to $4,500 per ounce on expectations of Federal Reserve rate cuts, persistent geopolitical risks, and strong central bank and ETF demand. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Bitcoin traded below 88,500. Now, of course, that's still a ridiculously high price to pay for nothing. But it's about 30% below what you had to pay for nothing a couple of months ago. All right, so that is a pretty big bear market in nothing. Bitcoin down 30%. In terms of gold, which again is a better way to measure the price of Bitcoin, because after all, Bitcoin is marketed as being digital gold, as being an alternative to gold that is going to replace gold because it's better than gold. So measuring how it's doing relative to gold makes a lot more sense than just measuring how it's doing relative to dollars. And in terms of gold, Bitcoin was down 42% when it hit the lows. Now, it is rallying, and I think today's rally is another opportunity for people to get out. I think the catalyst for the rally is the NVIDIA earnings, and everything is rallying tech. The NASDAQ futures are up close to 2% on the back of NVIDIA. And, you know, Bitcoin is a risk-on asset, and so it's going up. But what a lot of the, Bitcoin speculators don't realize is it's basically decoupled from risk-on assets, maybe not on a day-to-day basis. Some days it's correlated. But, earlier this afternoon, when Bitcoin was down near the lows, it was down over 5% on the year. 5%. The NASDAQ was still up 17%. So if the NASDAQ is up 17% and Bitcoin's down 5%, that's not much of a correlation. And so I don't think it really matters that AI stocks are rallying, because Bitcoin's got nothing to do with AI stocks. Yes, maybe NVIDIA beat earnings, but Bitcoin has no earnings. So it's irrelevant. But I think the money that is going into all things risk right now, that includes Bitcoin, I think by tomorrow, people will sell, even if they keep buying tech. But who knows? I mean, maybe we'll get a reversal in the tech stocks, buy the rumor, sell the fact, and that'll really weigh heavily on Bitcoin. But also, year to date, gold is up about, I think, 53 or 54%. And Bitcoin's down, was down 5%. And even after this big rally after hours, I mean, it's barely, it's flat on the year. Maybe it's up 1% now, because it's, several percentage points off the lows. We're trading back above 92, not back above 92,000. But a week ago, when I did this podcast, we were considerably higher than that, right? So we're breaking up. There are a lot of people that thought that Bitcoin would never go back below 100,000.
In today's news recap, UBS raises 2026 mid-year gold target price. UBS raised its 2026 mid-year gold target price by $300 to $4,500 per ounce on expectations of Federal Reserve rate cuts, persistent geopolitical risks, fiscal concerns, and strong central bank and ETF demand. We expect gold demand to rise further in 2026, influenced by anticipated Fed rate cuts, lower real yields, continued geopolitical uncertainties, and changes in the domestic U.S. policy environment, UBS said in a note. The bank lifted its upside case for gold by $200 to $4,900 per ounce if political and financial risks spike, and kept its downside case at $3,700 per ounce. A worsening U.S. fiscal outlook is likely to sustain central bank and investor gold buying given its lack of counterparty risk, UBS said, adding that it expects exchange-traded fund ETF demand to remain strong in 2026. Bullion has gained around 55% this year on geopolitical and trade tensions, robust central bank buying, and expectations of U.S. interest rate cuts, among other factors. On the flip side, potential Fed hawkishness and the risk of central bank gold sales remain key challenges to its bullish outlook, UBS said. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
Is the collapse of MicroStrategy or strategy. I keep calling it by its old name, the collapse of strategy. By the way, I did put out a challenge to Michael Saylor. I mean, he's been ducking me for years. I wanted to debate him about Bitcoin. And, he's refused every invitation to debate me. I mean, plenty have been offered. I've accepted them all. And he's turned them down. But I decided, since both of us are going to be at Blockchain Week in Dubai, right, I'm going there to have a debate with CZ, who, to his credit, has no problem debating me. And so he's hosting me at his conference so he can debate me. And the debate I'm going to have with CZ, which I think is around December 3rd or 4th, and it will be, streamed online. So if you can't make it to Dubai, you could watch it online. But the topic of my debate with CZ is going to be Bitcoin versus tokenized gold. This is the first time I've focused the debate on tokenized gold as opposed to just regular gold, physical gold. And obviously, I am going to be creating and launching at some point a token backed by gold. In fact, ironically, the one thing that might come out of the whole crypto bubble is tokenized gold, right? Gold may be the only real winner, right? Rather than killing gold, blockchain may have just given it a new lease on life by making gold even more efficient than it's ever been as a medium of exchange, making it more liquid, making it more divisible, making it more portable, right? All the characteristics that people think Bitcoin has that are better than gold are worthless without the underlying value of gold. But Bitcoin can have all of those characteristics, those improved characteristics, if you tokenize it. And again, you don't have to transfer physical gold to use gold as payments. Because when we were on the gold standard until 1971, nobody was handing each other bars of gold. We were transacting in paper dollars that were effectively IOUs for gold in the vault. We can do the same thing now with tokens, with digital tokens that are tokenized IOUs for gold that's sitting in a vault. Nobody has to actually go down to the vault and get the gold. The gold just has to be there, giving real value to the tokens, right, that represent ownership of that gold. So this is going to be my first real tokenized gold versus Bitcoin debate. And what everybody should be doing to support this effort is go to tgold.com, right? It's going to stand for tokenized gold, but right now it just stands for trade gold.
What do you think of today's show? Do you believe that the current gold and silver sell-off is some sort of coordinated attack against the metals, or on the contrary, is just big players taking profits after an abnormal rally? Post in the comment section your plan for gold and silver, and share with the stackers if you are taking any profits after the mega rally we experienced this year so far. Now, peep this video right here because it's a perfect fit for you, and I'll see you on the other side.